Welcome everybody, it's the Crypto Sniper. That's right, we're going to talk to you on Bitcoin over the Christmas and New Year period. Short technical update from yours truly. Yes, indeed. So what's been going on? We're also going to point one other token that is doing rather well. It's one we've been discussing in our community. You could have got in on it earlier. And then we're going to close out. It's going to be short. We want to say, hope you had a great turkey for your Christmas. Wishing you all the best for the new year. Hit a like and a subscribe if you haven't already done so. So what did Bitcoin do? This is what Bitcoin did. It had its run up over there. Then it came back down over here. Now, we spoke about the key level. That is the 42.5. That's it over there. And since then, you've been dovetailing around it, but the volatility has been dissipating. So this is very typical. This is very typical of continuation structure, more likely than reversal structure. You can see that you made a similar, almost as high, but we're much more relaxed, a bit more hang time before you slowly skidded off. Then, quite interesting, I want to highlight this. So we pointed to you to the 42.5. We spoke about the sine waving around it initially, and then later it becomes a little bit of hammerhead support. Now you traded through the 42.5. Let's change color. Get Agent Orange, Christine Lagarde. That's right. On guard, Lagarde. We had two hammers, but the heads were very much on the 42.5 level. So you're getting that sort of candle body hang time on the 42.5 and these little dips and rebounds back up. Dips and rebounds back up. So now where you were dovetailing roughly equidistant on the high side and the low side, that was the bread in your World Economic Forum burger, where that is the patty, you're on equi side, you sine wave on equi side, and then later it starts to have key level of significance just run support. That's why you get the hammers that you're seeing here, that they do trade below the 42.5, but they're overall holding hang time. So they're building and stacking volume by price over here. Talking of the volume by price, we also showed you last time, when you are looking at a structure, how you do the volume by price just for that piece of technical structure to ascertain, is it looking for the downside or the upside? Where is the tapping? Are you tapping on the ceiling, up and away, hands above and out of screenshot? Or are you looking for the trapdoor, looking down, banging on the door, the floorboards? Where is the gold stashed? Or is it the basement somewhere down there? And overall, on the biggest platform that we can arguably say Bitcoin trades upon, Bitcoin, although some may say, CryptoCap and Uniswap or others, on the 8-hour time frame, it is overall, and on other exchanges that I've looked at too, I'm not going to do them all, you can do this for yourself, we have ascertained that in fact we're tapping on the ceiling, and the bulk of that price behavior where you're getting real market engagement is actually occurring here and here. And in actual fact, since hopping onto this ledge, that was the low, so the candle that brought you for the first time or the last time up onto that ledge, the volume by price on the lower levels is actually rather small. It's actually rather small. So it's floating around here. There's real engagement and around here. So what happens when you get this level of engagement is that those that really want to sell are selling and getting thinned out. So you are lightening the stack on the ladder on the upside. That is our on balance of probabilities supposition using volume by price. The interesting thing as well, given that this is quite a quiet, supposed to be quite a quiet period, is that volume has maintained fairly well since the beginning of December. If you look at the December volume, you've hardly dropped. You had quite a good surge in the beginning of December. You came off a wee bit. So you had your on average, we've got a moving average there in the black. But on average, you've actually maintained quite good volume. So you can argue there was a slight dip as we approached Christmas the day before and over here. But actually been reasonably sustained. It's not as big a fall off as one might expect. I mean, if you look at the low levels of volume here in the back end of November, I would argue that there's almost some bored dads and of course the occasional mum keeping an eye on the crypto markets during the festive season. So there you have it. So what do we suspect will come? I'm going to remove the volume by price here. For this structure where, once again, as I say, we supposition on continuation and tapping on the top side. So overall, structurally, which is where we differed from Peter Brunt's assessment, was RSI divergences are not meaningful for us. You're down there and down here, and overall this is a fat band up leg to here for a second impulse, and then you started a down leg which has a slightly broadening structure. So we would call that a slide. We would expect it to be broken eventually to the upside. So you can, while you've had a red there, you could pull back a little bit. Again, you could interact with the 42.5 again, but the level and line we'd expect to see broken, we'll see you eventually doing something like that for a third high. That would be a scenario. We don't know it's going to do that. It's just a scenario that we might supposition for Bitcoin. And that overall gives you the big move up, the snapback harsh reaction, big wicks here eventually, once you were after you had quite a bit of a spill, a lot of distribution taking place at the 43.9, 44 levels. Then a moderate with a bit of up legs, down legs, upswing, and then a minor down leg period over here since roughly the 22nd through to the 25th, again with stronger up legs coming. So moderate up leg, firmer up leg after you tested the 42.5. So a little bit off, kiss maybe the 42.5 again, and then go for the 3. And then overall, that sets up structurally for us continuation to the upside. So that is why we differentiated ourselves from that opinion that he was expressing, because we prioritize pattern analysis, volume analysis, and volatility. The real indicator is price, and that involves patterns and everything else. The secondary data that is supportive is volume. Volume as per histogram below, by day and by price, for a pattern structure, for analyzing the pattern. This is what you're learning with us. And then continuation to the upside. So you watch us implement this in our community by clicking the link below, first link in the description. You too can be an HVF method trader and take it to the next level and watch us carve up the markets. Are we always right? Absolutely not. Do we get on balance of probability outcomes? Generally we do. So there you go. That is what you would probably eventualize. So quite a Picasso of luminous lines there for you to enjoy. Also, he mentioned that Ethereum would be down, so we'll cover the Ethereum. Again, we said never mind what you think you've seen. We see a falling wedge here, and falling wedge structures typically pop to the upside. During that period, you were actually also making a rising wedge, some might say, on a lower time frame. Over there, you can see all that we've drawn. Again, volume remains strong on Ethereum in the lead up to Christmas. Look at this. You would hardly say it dropped off. There was a little bit of a drop off there and then back up there. This is very standard volume. I would say you hardly, you maintained for the December month, pretty consistent volume all the way through. So there has been engagement on it. It's not price behavior light, which you don't take as seriously. You see the pop out the top on rising wedges. We showed a flag potential structure there. And what typically can happen, it's difficult when it does this, but you can get a flush out to the downside. You actually skidded into a downside, came back down and bounced on the legacy capping descending grind line of the falling wedge, which was the bigger structure. We always give precedence to the bigger structures by time frame generally. So you squeezed out the top of a rising wedge to break the bigger falling wedge. You went into a flag-like structure, but you skidded out of that as a flush out before having a violent move to the upside. Again, we asserted Ethereum to the upside when those that were interested in RSI divergences and their takes on the pattern behavior were suggesting it would go lower. So in this instance, you got a new high out of Ethereum, despite a little head and shoulder there at the top that gave you that nice flush out low. So you'll remember this for Bitcoin. This was as Bitcoin was making its high, and this was equidistance. And the interesting fact is on Bitcoin, this was the 42,500. And we've said before, the 2250 on Ethereum is like Bitcoin's 42,500. And in fact, we said the 40,000 for Bitcoin was the 2,000 for Ethereum. And they're doing very similar type price behavior around their key levels of significance. So going back to the orange squares that I drew for you, the orange square, let's do it. That was your high. You remember I was showing you the bread of the World Economic Forum, and then I said a volatile spill, and then the lower bread, and then you had your burger patty in the middle. That was the 44s, I think it was on Bitcoin, 44s and a half. Then it was the 42 and a half is the locust burger. And then you were right through to the bottom and you were 2K lower. You're at around 40 and a half. So in the same way, Ethereum is giving you that. So to have divergent views on both Bitcoin and Ethereum is dangerous on a basis of that they're both correlated. They do lag. And of course, for a while, Bitcoin dominance has been asserting and Ethereum has been slipping. That generally means the upsides for Ethereum have been less in percentage terms than the upsides for Bitcoin for that period. But overall, we expect good things. So this was a break here. And in fact, it started there of the falling wedge. It was a pop out the top for the rising wedge. You got your return move to the falling wedge after breaking it, which is common. You wanted a flag, you slipped and skidded out your flag, and then you pumped and got your pole. So the flag pole would look something like this. Again, we got a Picasso of great beauty developing here. Scribbled crazy lines, some may say. There's your pole and there's your pole. And that's why you rest now. Target made on a flush out. So the flag channel, as I say, a little bit of a skid out, and that can happen. That's why you can't set stops on bull flags. Because sometimes flags can do that, and they can just do enough to flush you out and then go and do exactly what you expected them to do. So there's your base, there's your high, this ends up your low, and your projection is roughly up top here, which you've made on the targeting side. So again, Ethereum higher, and I want to also highlight that actually the volume is strongest on those bull moments. So there's not heavy dominant selling where the sellers are winning out. The dominance is actually on the bulls. Look at these green candles there. Dominance bulls. Again, dominance bulls. The only time you had somewhat of a high, and they were quite isolated, were here on the spiller in your very first instance after making an upside HVF target. Okay, so everything makes perfect sense when you start understanding and doing the analysis. So quite a lot of scribbling, quite a lot of stuff we're illustrating to you here. But let's just remind you of that upside structure. There she goes. There she goes. That was the HVF. And with our unique tool, yes, we have tools. I sound like the Fed Chairman Powell. We have tools for that. You mean print money as per every time? Yes, I have a tool. I am a tool. Oh dear. It's one of my favorite rock bands, by the way. Anyway, it is tool. So there we go. So you can see that target was made over there. You had a bit of overperformance. You got a tiny micro, we call it a monarch head and shoulders. Find out our phraseology, terminology for bringing sense to price behavior, how patterns and everything else can be used to put you in a better position in terms of what to expect next in technical trading. That's right. And we are not day traders. We are long-term investors. We want the macro bias. I want lifestyle. I don't want to sit on screen scorching my eyes. You too can do that. And you can get your investment decisions right. You could have been long there. You could have had a tight stop there. By the way, this is showing a 3.64 there. In overall, you would have made that target, had your first pullback, a bit of overperformance, and then you get the one moment where there was heavy volume in selling and you had two bars that were really big. Everything else actually has been reaccumulative, and you're at a new high on that move up for Ethereum on a small pullback. So overall, again, I'll go back to when we did the video. I said I would update you between Christmas and New Year, and that's exactly what we're doing. And our argument has been made successfully that Ethereum has traded higher than when we did the video with an alternative view and an alternative opinion on what's likely to happen next for Bitcoin and Ethereum. Finally, I will leave you with a quick check-in on Matic. So many people say, well, you don't do Matic, you don't do this, you don't do that. Well, our community was in that and remains in it. There was a lovely HVF for a left shoulder. So there's a couple of framings here. The orange is left shoulder. That's left shoulder. Left hand, Francis. That was ladies' left hand. Sorry, ladies. Left hand over here, left shoulder. Right hand, right shoulder over here with the upside HVF. Sorry about that. Yes, indeed, indeed, indeed. So you have an inverted head and shoulder with a neckline on the 95 cents. The 95 cents breaks to the upside and gives you an excellent target. We'll show you that in a second. And then also another framing you can have is the pink red W bottom. So we're showing you that there's a number of ways you can reference this reversal, but reversal it is. There. Notice also how we get the rounded, less volatile buttock cheek, if you'll excuse me, on the W bottom on the second one. So you get the volatility in the first, you get the reduction of volatility in the second, where it's broader, sleepier, slower, calmer, but pretty solid on the up leg nonetheless. So this again is our approach to focusing on volatility and its meaning for continuation and reversal. We are the only technical analysts that put volatility in pattern structure in true sense with recorded content that you can watch. Click the link below, go ahead, and you can be part of our community, learning the value of volume, volatility, and patterns, and why price is your best indicator, not some lagged mathematical formula applied on anything else. So that W has a slightly different neckline, but I would expect both to be made, and it runs straight through this lovely structure, which we'll talk about in a minute as well. Again, while we're still on the volume, outlier, super high volume, not one single one backed, one after the other after the other. Triggering event, key level of significance must be broken with momentum and real power, which implies volume, and there you have it. Everything we say, everything we teach in practice works in the markets practically real time. You will see it enforced consistently until you become someone who says, wow, this is the power that matters. The last time you had big selling was over there in the original spill into the W. Everything else stacking up nicely for Matic as well. So this little HVF, it's not so little actually, we're on a daily time frame, it's very strong, but we have good upside targets overall. And remember, this is reversal, so you typically get overperformance beyond. You're at a 1.84 and you're at just through $1. By the way, you could have been in here a lot earlier. You would have needed to be in our community to know that. We are watching many of the major cryptos as they are performing reversals. More reasons why we are seeing a bullish reversal structures in many alt markets, and we continue to assert bias to continuation, bias to bull, bias to upside in the crypto markets across the board, being manifested and shown technically. 360-degree analysis, look left, look right on all the key tokens. You need to have that understanding to be successful in crypto and to have the correct biases. You would not be making bear calls on Bitcoin and Ethereum if you did. Okay guys, hope you've enjoyed that quick checkup. I'll finish with the lower time frame on Matic and where it all was, and again our draw tool, how it works. Amazing. Doing some great testing on that one, and of course when eventually we are ready to release, our community members will be getting the main benefit of that. Book a call below so that you too can come and find out all about how we do what we do, how we continue to look to add value by bringing in great tools that people can use to do their risk reward and HVF plotting and charting in the methodology. I'm going to shift us up just to the 6 hours here. And again, you will see the structure where you could have had stops over here, clear for you around about the 82 cents. You could have got leverage long in and around the 88 cents. That's a 6 cent, by the way, and you would have been up, away, smashed up, and in a very good position. Oh, why are we pulling back now, you might ask? Oh, damn, there's that second interim that you've just made after running the first interim, which you also had a pullback on. Isn't it all coincidences? It's so nice when you get things that actually work, guys, and aren't coincidences. Pull back after the first interim in the direction of your funnel. No panicking. It's expected. Surge up. Make second interim. Shooting star. Pull back. No panic. Target coming next. call it a coincidence. By the way, overperformance expected here. A, because it's the first upside HVF in a new trend, plus all the other patterns were triggered when you broke the 95 here, and of course the level here at, what was it? I think it was around 85 cents over here on the W bottom and the inverted head and shoulders. How many more technical patterns do you want on your team to be a winner? Well, we have 3, okay? And it all points to overperformance for Matic and Polygon. Until next time, hit the like, book a call in the link below. You're coming into a new year. This is going to be a critical new year. It's going to be a volatile new year. You want to make your wealth and hold your wealth in a year where there could be demand destroying events also playing out right now. Crypto bullish, make it, but be conservative, don't be over leveraged. This is non-advice. Thank you for watching. Hit us a like if you learned something today and it was of value. We appreciate it. Don't forget to leave your comment. What token do you want us to tell you about? What do you think the outlook for Matic is in your own worldview? Goodbye until next time.